Hello everyone, and thank you for joining us here at xm.com. You are watching the weekly technical outlook video for the week starting Monday, March 11th. I'm Christina Barthenido, investment analyst, and at this video I will briefly explain my outlook on dollar yen and pound dollar. It might be another volatile week for the US dollar as the focus turns to the US CPI inflation data on Tuesday. Thursday's retail sales could also create some volatility. While in the UK, investors will closely look at February's employment report and Wednesday's GDP monthly data for January. And finally, I will switch to stock markets and particularly analyze Nvidia stock, which hit a new record high last Friday. So starting first with dollar yen and the US CPI inflation data, expectations are for the headline CPI to hold steady at 3.1% year on year, but investors expect a weaker core CPI inflation measure, which might come in at 3.7% from 3.9% previously. If the data indeed weaken, that could further increase confidence for June rate cut, especially if US retail sales also disappoint. In this case, we may see more selling in the US dollar, and it will be quite interesting to see whether this downfall will extend below the 200-day moving average at 146.25. The 50% Fibonacci tracement of this downtrend over here is nearby at 146, so close below this. I expect close below this level to generate more selling, likely driving the price towards the 38.2% Fibonacci of 144.70. While lower than that, we may see some stability somewhere between 143 and 143.30. Now in the event, well, if you look at the technical indicators, both the RSI and the stochastic oscillators are very close to overbought levels, suggesting that perhaps downside forces might soften in the short term. So if we see a rebound, the price will need to overcome the 147.45, 140 territory formed by the 61.8% Fibonacci mark and the 50-day moving average in order to accelerate towards the 20-day simple moving average, which is currently converging towards the 78.6% Fibonacci of 149.40. Above that, the pair will attempt to resume this upward pattern above the 150.80 key resistance territory. Now turning to pound dollar, well, pound dollar had an amazing performance last week. It finally resumed its upward pattern in the medium-term picture, rising as high as 1.2892 on Friday. Investors will look to see whether the employment report will help the pair to extend its gains. However, if we look at forecasts, the numbers suggest a slowdown in employment and weaker wage growth. And if that proves to be the case, or we see or we get lower readings, that could push pound dollar to the downside. In this case, I will look for support around this ascending constraining line at 1.2770, which is currently around the December and February resistance territory. A break below that base might then confirm additional losses, probably towards the 1.2690, 1.27 area, where the 20 and 50-day moving averages, as well as this resistance trend line from July 2023, are all located. However, if the sell-off continues, and particularly if it continues below this support trend line from 2022 at 1.2655, then the focus will turn to the 200-day moving average at 1.2580, where the price stabilized back in February. Lower than that, the pair will retest its previous lows within the 1.25 or 1.2525 region. Well, according to the technical indicators, the market looks overbought, so there's potential for downside correction. However, if the price manages to extend its rally this week, resistance could initially come at 1.29, and then perhaps a steeper increase could push the price up to 1.30. Finally, looking at Nvidia stock, Nvidia stock has been the king of AI this year. It had an outstanding rally in stock markets, doubling its price from December's closing level. The US non-farm payrolls report helped the price to hit a record high of 973 last Friday. Though disappointing earnings from key semiconductor retailers have probably waved on the stock on Friday, pushing the price to a low of 864 on Friday, and back below this resistance line over here. Given the overbought signal from the RSI and the stochastics, there's potential for more weakness in this market. So perhaps investors might think that this downfall over here, which was the largest daily decline in a while, could be the start of a bearish wave, though I believe that there's still some key support levels on the downside, which could still help the stock to resume its upward pattern. The first one is the 23.6% Fibonacci of 836, and then below that the 20-day moving average, and that constraining ascending line at 782 could also help the price to reverse up. Any break lower from here would worsen the outlook, likely triggering a faster decline towards the 50% Fibonacci of this uptrend over here at 682. If the 50-day moving average fails to support the market as well, then the 61.8% Fibonacci of 613 could be the next target on the downside. According to futures market now, the price is expected to open slightly higher today, but what investors would like to see is an extension above the 925 level and above this resistance line. So if that happens, we may see another test near the record high of 973, or perhaps a steeper increase up to the 1000 critical number, a break of which could take us up into the 1050, 1100 territory. So that's all for this week's important markets. Thank you for watching, and see you next time. Bye bye for now.